Is the housing market about to crash in 2025? It's the question everyone's asking, especially first-time buyers who've been priced out for years. With home prices still high and mortgage rates refusing to drop, many are hoping for a crash to finally make homes affordable again. But is that really on the horizon? Or is the dream of cheaper housing just that? A dream. In this video, we'll break down what's happening in the real estate market, what experts are predicting, and what it all means for you. So, without any further delay, let's get started. Will the housing market crash in 2025? The real estate market has been unpredictable lately, leaving many potential homebuyers anxious. With soaring home prices and mortgage rates that refuse to budge, it's natural to wonder, will the housing market crash in 2025? While the idea of lower prices sounds appealing, experts don't foresee an immediate collapse. Understanding the factors driving the market, from supply shortages to economic shifts, is key to predicting its future. In this video, we'll dive into expert forecasts, explore what might trigger a crash, and discuss how this affects both buyers and sellers alike. The current state of the housing market. The U.S. housing market has experienced rapid price increases over the past few years, largely driven by a combination of high demand and low supply. As of recent reports, home prices have risen by about 2.6% year-over-year, with continued growth expected in 2025, although at a slower pace. Elevated mortgage rates are also keeping demand from skyrocketing, with many buyers opting to wait rather than rush into the market. With limited housing inventory and high competition, the real estate landscape remains challenging for first-time homebuyers, making it difficult to find affordable properties. Expert forecasts for the 2025 housing market. Industry experts predict that home prices will continue to rise in 2025, but at a more moderate pace compared to recent years. Fannie Mae forecasts a 3.5% increase in home prices for 2025, while the National Association of Realtors expects a 3% rise. However, these predictions are not set in stone. Economic changes, including inflation or shifts in interest rates, could affect these numbers. For instance, mortgage rates will play a huge role in determining home affordability. Even slight drops in rates could encourage more buyers, influencing home prices across the nation. The role of economic indicators in the housing market. Several economic indicators can impact the housing market, including unemployment rates, inflation, and consumer confidence. The Federal Reserve's recent projections indicate that unemployment may rise slightly, but overall the economy remains resilient. If unemployment climbs significantly, we could see a downturn that may impact home prices. However, current data shows that the economy is not showing signs of a major collapse. Foreclosure activity, while up slightly, remains low compared to past recessions, which means the market is not under severe stress. These factors all contribute to the stability of the housing market. Why economists don't expect a housing market crash. Despite the concerns of many potential buyers, most economists believe a housing market crash is unlikely in 2025. A major reason is the ongoing supply shortage. The U.S. is facing a significant housing shortage, with an estimated 2.3 to 6.5 million units needed to meet demand. This lack of available homes is preventing prices from dropping. Unlike previous housing crashes, which were fueled by oversupply, the market today is limited by a lack of inventory, making a sharp price drop highly unlikely even if demand weakens. How the last housing crash impacted today's market. The housing crash of the mid-2000s was a major turning point for the real estate industry. In the years leading up to the crash, lenders were offering mortgages to high-risk borrowers, and home builders were overproducing homes to meet the growing demand. When the market crashed, it led to widespread job losses and a collapse in home construction. The industry struggled to recover in the years that followed, leading to a continued shortage of homes today. This lingering effect from the last crash is part of what's keeping home prices high in 2025. The impact of first-time homebuyers on the housing market. First-time homebuyers, particularly millennials, are a major force in today's housing market. Millennials have surpassed baby boomers as the largest group of homebuyers, making up around 38% of the market. Many of these buyers have never owned a home before, and their demand is only increasing as they reach key home buying years. This, however, adds more pressure to an already strained housing supply. Gen Z is also starting to enter the market, further contributing to the demand. As millennials and Gen Z make up a large portion of the buying pool, competition will remain fierce for available homes. Home price trends and predictions for 2025. Home prices have been climbing steadily in recent years, driven by a shortage of available homes and continued demand. As of February 2025, the median price for existing homes reached approximately $398,400, marking a 3.8% increase from the previous year. Experts predict that home prices will continue to rise in 2025, but at a slower rate than in previous years. Fannie Mae and the National Association of Realtors both predict modest increases in home prices, although economic factors, such as inflation and interest rates, could influence these predictions throughout the year. Mortgage rates and their effect on the housing market. Mortgage rates play a significant role in the affordability of homes. As of March 2025, the average 30-year mortgage rate is approximately 6.45%. While this is similar to rates from the previous year, it still presents a barrier for many homebuyers. Mortgage rates are expected to decrease slightly in 2025, but it remains unclear how much this will affect overall affordability. Even if rates fall, buyers may still struggle to find affordable homes due to high prices. Lower mortgage rates could make it easier for some buyers to enter the market, but housing supply will remain a key issue. The Federal Reserve's impact on the housing market. The Federal Reserve has made several adjustments to the federal funds rate in recent years to combat inflation, and these changes have directly influenced mortgage rates. In 2024, the Fed lowered the funds rate 3 times, signaling a shift in monetary policy. The future direction of mortgage rates largely depends on whether the Fed continues to cut rates or maintains a hold. Inflation is still a concern, and if tariffs or other economic factors push inflation back up, the Fed may pause its rate cuts, which could affect the housing market's trajectory in 2025. Predicting a housing market crash. A housing market crash typically happens when there's a major imbalance between supply and demand. If demand suddenly drops due to factors like widespread job losses or rising mortgage rates, home prices can plummet. On the flip side, if there's an oversupply of homes, perhaps from a surge in new construction or foreclosures, prices may fall too. However, with current supply shortages, it's unlikely that home prices will crash unless larger economic conditions drastically shift. How to prepare for a potential housing market crash. Even if a housing market crash doesn't seem likely in 2025, it's always wise to be prepared for any eventuality. To protect yourself financially, consider maintaining an emergency fund, avoiding buying more home than you can afford, and opting for a fixed-rate mortgage. This ensures that your mortgage payments stay predictable, regardless of economic shifts. Saving for a larger down payment can also help provide some equity in your home, making it easier to weather any future downturns in the housing market. So, will there be a housing market crash in 2025? Probably not. But that doesn't mean you can't prepare for changes ahead. Focus on what you can control: your budget, your credit, and your timing. The market may shift, but smart planning never goes out of style. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more insightful content. Thanks for watching. Until next time, stay informed and keep planning for your future.